Good morning. Today is Wednesday, July the 12th. The time right now in Singapore is 10:55 in the morning. And today, let's do a bit of recap as to what happened on Wall Street overnight. We have basically equity markets are rallying overnight ahead of tonight's consumer price index release, and that will be at 10:30 p.m. Singapore time. And this will be the highlight for the week itself. Now, our market do have expectation. Of course, the headline numbers are expected to come off from 4% to 3.1% on a year-on-year basis. But the main item in this report here is the core inflation. And on a year-on-year basis, the core inflation, meaning to take out the food and energy component of the CPI construct, traders are looking at a downgrade from 5.3% to 5%. So if the core inflation remains relatively stubborn, which it has over the last 7 months, then the Federal Reserve may not have a lot of leeway but to continue to rate hikes, especially in the face of a rather resilient US economy, as shown by the revised Q1 GDP numbers from 1.3 to 2%. And of course, last week we have seen a robust labor market. So basically, the ingredients is there for the Federal Reserve to continue hiking. Although on Monday, we have various Fed officials coming in online to suggest that we are likely to be ending the end of the rate hike cycle. So that caused the dollar to come off yesterday's trading. But as far as equity market is concerned, they take it as perhaps a good news that no more rate hike is going to be, no more surprise rate hike is going to be on offer after the 2 rate hikes that the Fed chairman has already hinted that will happen from now until the end of the year itself. And this month we have the FOMC meeting, which is going to be scheduled on the 25th and 26th. And market already expected during this meeting they're going to hike interest rate by 25 basis points or 0.25%. So that leaves only one more rate hike towards the end of the year. So the market right now has no fear. In fact, the risk appetite has actually increased. So that means the market has a reason to actually rally based on this sentiment. But again, we have to see, technically speaking, I do still have expectation that the market may actually pull back a little bit in the Dow Jones towards the 33,300 to 33,500 levels for it to build a more durable base for it to challenge much higher prices going forward. Now, if the market do rally from here, of course, it is possible. The key level to watch will be 34,712, which I have alluded to for many times because this is the year high that was set in January of this year. If the market do take out this level, it is a different ball game altogether, and all bearish sentiment would have to be cast aside. Now, in the S&P 500, we also see that the market has also basically firmed up overnight ahead of tonight's CPI release. And of course, I still have expectation that the market may eventually come back down to test this low support line here at 4,328.8. Whether or not it will actually pans out, let's see. But if the market do rally beyond 4,458.5, then of course the market is definitely heading higher into a bracket of prices, which I think may actually invite the sellers to reappear, and that level will be 4,512 to 4,538 thereabout. So do watch out for the market to have a adverse reaction within this bracket of prices. Over in Nasdaq, we can see that Nasdaq has not really pulled back significantly, at least not in a very visible way. So the market sentiment is still very much in favor of a challenge to the upside. If the market do take out 15,284.65, which was a high traded 3 weeks ago, then of course the market will be gunning much higher, perhaps into this target at 16,265. Okay, that is my target here. But if the market do pull back, I won't be surprised as well, especially if the pullback is limited to 14,500 to 14,700 range, okay, which is actually a good area for those who are still doing scalping to actually position long here. But again, it's getting increasingly dicey to buy at such elevated prices, so just be a little bit more careful. Okay, over in Asia, we can see that the Nikkei has continued its descent. This morning, the market appears to have more or less stabilized, but at the point of right now, what we are seeing here, the market has just broken out the 32,000, and that could set the stage for a challenge, perhaps either into the 31,400 levels, which I think may actually offer some kind of support here between 31,350 to 1,400, that bracket of prices may actually offer some relief. But again, this is a three-wave pullback, nothing to be excited about unless the market accelerates to the downside very sharply in a waterfall manner. But unless that happens, the market still have a lot of bullish bias. So to be careful selling this index here for the time being. Over in the Hang Seng has actually recovered, continue its momentum since we saw on Monday itself. The market bottoms out at 18,279.7 on last Friday, and this week we have seen prices has starting to rebound. But again, I have mentioned previously, the upside potential is probably going to be limited to 19,450, which is the previous high here last seen on January the 4th. And over in the mainland index itself, we have the Shanghai Composite Index also attempting to rally, but the rally looks very tentative for now. Doesn't look as strong as what we see in the Hang Seng itself. Again, top side could be contained between somewhere between 3,246 to 3,276. So do watch out for this bracket of prices to cap any further rally. Over in the energy markets, crude oil actually went higher on the back of the international agency, energy agencies forecast that the market could be a little bit tight, and that caused the WTI prices to actually punch beyond the $74.92 high last seen on June the 5th. Okay, so we have a new high for now at $75.10, but be careful chasing this market above this level because the risk of a pullback, maybe a very shallow pullback, but still a pullback nonetheless. Be careful chasing this market beyond $75 for now. And if the market do pullback, I do expect it to hold somewhere between $73.20 to as low as $72. So ideally, the market stops falling at $72.64, which is the low last traded on January the 10th. And over in precious metals, it is still very sluggish, although we still see a bit of uptick in gold prices. Gold prices traded to a high of $1,941 this morning. Not much further from where I think the cap may actually be a ceiling here at $1,945 to $1,955 per ounce. So do watch out for some kind of a barrier to higher prices contained within this bracket of prices. And on silver itself is also struggling. It did not have a marginal high for now, but the momentum suggests that we may be able to see an extended rally beyond the current high at $23.39 to perhaps towards the $23.72 to as high as $24 per ounce. Okay. And over in currencies, we can see that the dollar continued to move very aggressively lower, and right now it is already hovering just above the 101 level, and this is definitely an extension of the fall from 104.62. And you can see this larger degree decline may actually target somewhere between 99.4 to 100.15 here. So the 100 level in the dollar index is quite doable based on the momentum of its fall. Okay, and this is happening ahead of the CPI numbers. Definitely the market knew something that we do not as of now. Okay, so in the face of a decline in the dollar, the other currencies has been rallying. The euro has gone up to the high of 110.33 this morning, and this is smack in between the prices of the range of prices which I believe may entice sellers to reappear, and that level is 110.50 to 110.90 levels. So do not chase this buying beyond the current level here, because the risk of at least a minor pullback to 109.40 is very real. And in sterling itself, we also see the market rally up this morning to 129.70. Again, it is very much in the bracket where I think the seller may actually reappear, and that bracket is 128.90 to 130.70. So we are just under 130 even right now. So again, the risk is to the downside, so be careful about chasing this much higher. Okay, of course sterling has its fundamental, because we have seen the inflation number has deteriorated in the UK in yesterday's number, and that may prompt the Bank of England to actually hike even more aggressively, and that's the reason why sterling has been rallying. But again, we have to watch how things pans out. Over in Aussie, we see a rally in the Aussie market to 0.6740 this morning with a high of 0.6742. But again, be careful chasing this market much higher because this is still a three-wave rebound, suggesting that this is nothing more than a corrective rebound, and the prices is still vulnerable to the downside. And if we do see an unraveling of prices below 0.66, for example, then the market could be heading towards 0.65 to as low as 0.6460. So be careful about chasing this market again. Okay. In the dollar Canadian, we see Canadian continue, dollar cap continue to decay, and right now we are at that pivotal point. If the market do not go much lower below, let's say 172, no, 132 itself, then there's a chance that it may actually rebound from here. But again, for now, the price in which it is currently trading suggests that there is minimal support here. Most likely, the downward momentum may actually take prices towards the 130 levels. So it could actually happen both ways. If the rebound happen from current levels, it may actually go up to 134. But if the market do break and close below 132, it is probably heading towards 131 to perhaps even as low as 130. Okay. Dollar yen is the one that is really, really massively coming off in the big time, and this is what we call a waterfall kind of fall, and this suggests that the top is seriously, we can seriously consider the top is in place at 145, last traded just at the end of June itself. So this fall here may actually have a short-term rebound, possibly caused by tonight's CPI release. And if we do get a rebound to 140.70 to 141.55, that could be a good area to position short for the extension of this decline towards 138.70. So at this current level, do not sell at where we are right now, which is at 139.60. Much better place to sell will be at above 140, ideally above 141. So that will give us a little bit of safety instead of selling at current levels. So again, this is what I have. And in the digital asset space, we can see that Bitcoin is not going anywhere. It is still consolidating. And like I said previously, this consolidation may last a few more days, perhaps until the end of the week itself, or perhaps even to early next week. So do not get into a position in Bitcoin right now, because the market need to resolve its consolidation. Okay, likely to be a case, a simple AB3 pullback will target 28,800 to 29,550. So anywhere between these two prices, market may actually find a bottom, and then it will probably resume its up run from 24,756. So this is my view for the various markets. In the meantime, you take care, and I'll come back to you with another update tomorrow. Bye bye.